Today's guest for the Housing News podcast is Sarah Dekin, President and Chief Operating Officer at Hometap. I'm Clayton Collins, CEO of HW Media and your host for the Housing News podcast. And in today's conversation with Sarah Dekin, we have the opportunity to explore the home equity investment space, getting a better understanding of the market opportunity for HEI, the different business models that consumers and homeowners are tapping to access their home equity, and some of the opportunities that lie ahead. Sarah has been front and center in the headlines at HousingWire recently, being recognized as a HousingWire Woman of Influence. And Hometap was recently recognized as one of the fastest growing companies in the United States by the Inc. 5000 Awards. I hope you enjoyed today's episode with Sarah Dekin, the President and Chief Operating Officer at Hometap. All right, Sarah, welcome to the Housing News podcast. I'm thrilled to have you today.
I'm so excited to be here. Thanks for having me.
Well, Sarah, I'm excited to have you on the heels of a lot of press and attention that you and your organization have received very recently. So HousingWire just recognized you as a woman of influence in August. Congratulations, and thank you for your contributions as a leader in the industry.
Thank you, Al. I really appreciate the recognition.
And you also, news just dropped of the Inc. 5000 Awards, where Hometap was ranked one of the fastest growers in the country. And I want to go deeper into that topic and ask more about some of the drivers for that growth. But first off, congratulations. One of Influence, Inc. 5000. Things are looking good for you and Hometap right now.
Yeah, no, we're really excited. I know we're going to dive deeper, but it has been really a fascinating journey to work in the home equity investment space in particular, as that sort of comes to life, and really engage in all of the dynamics at play when you're trying to build something new.
So, Sarah, as I talked to our selection committee for the Woman of Influence Award, I asked, what were some of the things that stood out? And the big thing that they brought to my attention was the role that you've played at Hometap and joining in a marketing leadership role and evolving to president and COO, and what that meant from a category creation perspective. So HEI, home equity investment, has certainly not a new category, but has gotten a lot more attention and a lot of new models in recent years. So our team loved the contribution that you've had to helping define this category as it exists in the current decade. So I'd love to hear from your point of view, from when you joined Hometap to where you are today, what that category creation process has kind of looked like, of building and then educating what HEI options look like.
Oh, yeah, absolutely. We certainly were not the first in the space. There were a couple of players who were sort of starting to pave the way ahead of us. But when we looked at it, we thought this is a really, really interesting value proposition for homeowners. And, for those who may not be quite as familiar with what a home equity investment is, it's essentially an option for homeowners to access some of the equity that they've accumulated in their home, but taking an investment instead of a loan. And so essentially we make a minority investment in a homeowner's property, and we have a predetermined share of the home's value at the time that homeowner settles through a sale or refinance, what have you. So if you take that a little bit in contrast to what traditionally has been out there in terms of debt-based products, you can see it's a little bit different and it works a little bit differently. But for us, entering a new market in a new category, I think the most important thing to get right, frankly, was that homeowner experience. And specifically, the thing to get right was to make sure that the homeowners felt that they had a very firm understanding of what this is and how it works and how it might play out under different scenarios. Because if you're introducing something new, and quite frankly, most homeowners don't know how and don't really want to know how to translate all of the verbiage and terminology and the whys and the wherefores and what goes on behind the scenes in a real estate transaction of any sort. And so our job is to make sure that we can do that for them in a way that is, clear, it is accurate, it is transparent, it is precise. And so for us in building this out, really thinking about what do we need to do so that a homeowner feels like they have all the information they need, that they have a thorough understanding to be able to make a good decision for them. And so, that really was where we planted our flag as we set out to do. And I think that has proven to be quite effective for us in terms of having educated homeowners and also creating a really, really strong relationship with the homeowners.
So, from a homeowner point of view, what are some of the considerations or pros and cons or decision making considerations when choosing between accessing a traditional home equity line of credit or a cash out refi versus this equity option that's become more prominent through Hometap and others?
Yeah, so we are very, very focused on our mission, which is to make homeownership less stressful and also more accessible. And the less stressful part is really about monthly payments. And so, that would be one of the, not the only, but one of the significant ways in which, if you were to take a home tap investment versus a HELOC, that is a significant difference. So, by way of making that investment upfront, and then we don't receive anything until the homeowner decides when and how to settle that investment. We do have a 10-year term. Um, that allows the homeowner so much more flexibility and frankly de-risks their monthly experience. So the biggest stress about home ownership are the financial stresses. You've got the mortgage payment, you have to repair and take care of your house. Property taxes are relentlessly increasing. And so for a lot of homeowners, when they look at the equity they have in their home and they think about accessing it via a debt product, and then they think about what that means from a monthly cash flow point of view, it's just not as attractive as it might otherwise be, and frankly as it might be to some people. So for sure, there are people for whom a HELOC or home equity loan might be the right choice.
So, when a consumer or homeowner looks at their personal balance sheet and their personal monthly P&L, they can kind of make a calculation. Would taking on an additional loan put us in a stressful financial scenario? If it does, is a home equity investment the right option? How do you quantify that decision making process, and how does a consumer start to calculate, like, what does this investment mean in the long term? How much equity are we giving up? What's it going to cost us in the long haul in comparison to a loan product?
Yeah. So I think a couple of important things, in addition to the no monthly payment, the amount that a homeowner ultimately will owe Hometap is a function of the home's value. So from an alignment standpoint, the higher the value of the home, the more the Hometap share is worth, and consequently, the lower the home value, the less the Hometap share is worth. So our payment is quite variable depending on the home price, which adds a good amount of alignment between Hometap and the homeowner. Um, One of the features of our experience is the estimate, and so the estimate is an interactive tool, and it is customized to a particular and potential investment. So a specific home value, and then we calculate the maximum investment amount that a homeowner would qualify for based on the information we have at that time. So it is an estimate. Um, but it allows the homeowner to really play with that interactive scenario tool. And the things that really matter are, what is your ending home value? When do you expect to settle that investment? You can play 5 years, 6 years, 3 years, 10 years, whatever. And how much of an investment do you want to take? And so you can toggle all of those different inputs to clearly understand at that time of settlement, how much of that sale price, if you were to sell it, as a for instance, would you keep versus how much would Hometap keep?
And so that calculation of, like, Hometap has to be having running some valuation models and having a view on, like, where home price appreciation is going over a period of time. The last few years have been tricky. I think we saw faster home price appreciation than many folks would have imagined in, like, the 2021, 2022 period. We're at a point now where there's a little uncertainty, and it seems like a lot of the housing economists are revising their forecasts for the most part to the upside on future home price appreciation. I imagine those are reports and data analysis that you have to watch pretty closely making these types of investments.
Kind of yes and no, meaning meaning I think that nobody really can accurately forecast home price appreciation beyond a pretty short window of time. And if the last several years haven't proven that, I don't know what will. But there are so many macroeconomic and external factors that influence ultimately what home price appreciation will be. that we don't pretend to like be able to pick markets, but we definitely believe that a diversified portfolio, geographically speaking, is really the best way to go, and that actually serves our mission of wanting to try to serve as many homeowners as possible.
So let's talk about the business case. So like why home equity investment? Why home equity investment now? It like the I mean, not just 2023, but over the last 5 or 6 years, there
Yeah.
seems to be momentum here.
Yeah, there's definitely momentum. It's kind of interesting. I think number one, there's just a void in the market, right? When you part of innovation is trying to understand where there's some amount of dislocation in the market and trying to figure out, oh, that's very interesting. Why is that? And there's something that we could do that could fill that gap. And I think that is very true of home equity investments. I think if you sort of go way back to the introduction of the mortgage itself, and then, the agencies, after that to be able to expand the addressable market, if you will, or the qualified pool of um, mortgage holders and homeowners, that those occurred in a very different economy. Those were brought to market in a time when both employment and income were quite, stable and secure. Long-term employment and the associated income, the rate of change was just not what it is today. And I think, but this is the economy we live in, and in particular, I would say with respect to income. And I think that the variability of income and the, you know, I think I just think that people have a little more, I'll call it income insecurity. And it doesn't mean that they don't have the income today to cover their needs. But I think the security around having that income, that same income or, increasing income 3, 5, 10 years from now is just not there. And so homeowners, desire to sign up for a long-term committed cash outflow is not what it used to be, and probably for good reason. So I think that when you recognize that and you say, well, is there an alternative that better aligns with the realities of how many homeowners live today, you kind of come up with a home equity investment, which is, why don't we just like be in it together? Why don't we just own a minority stake in the home, and when they do better, we'll do better, and vice versa. That doesn't require a monthly cash commitment.
So when you look at the overall landscape and economic landscape for homeowners, there's a few different forces out there right now. And I think you're talking right now about income and affordability, which is, one force. Two other forces that are at play are the amount of time that people are staying in homes. So we've gone from a world where the average homeowner stayed in their home for 5 to 7 years. Now we're in like the 10 to 12 year time range, which creates increased, or at least the way we see it, increased demand for renovation and improvements or expansion. Some of the reasons that people may want to tap equity in their home. On the other side of that, a lot of people see that opportunity, and we've seen independent mortgage banks and depositories that for a long time weren't at, or actually depositories have been active in home equity for a while, but independent mortgage banks have not. And now we see an increased interest in playing in this space because of the consumer opportunity. As a HEI business, how do you kind of look at the overall competitive landscape of depository retail banks and independent mortgage banks who want to serve the same consumer with a similar outcome of helping them access housing equity, but through an entirely different product suite?
Yeah. Uh, Look, it's good. I mean, the reality is for us, you know, combination of factors that frankly makes the whole home equity category very interesting over the last several years. And I know you know what they are, which is, this quick rise in home value, right? So, wow, there's a lot of equity. And then couple that with low interest rates, it's, piqued a lot of people's interest in, I have all this equity, like maybe, I should consider accessing it to fund any number of things. And really, because there were so many people in the market for home equity, if you will, it was a great time for us to be trying to generate awareness around what we do, because people were looking for alternatives. And, it is a huge market. I mean, as we know, US real estate is just a ginormous asset class. And when you think about the, average amount of equity that the average homeowner has, I mean, that's a big, big number. And there should be different products because people are different and their needs are different and their means are different. And so I think this is such a large market that definitely more products and more options is a good thing, literally for everybody.
And if anything, it raises awareness of the ability to access equity in your home. And like you might not be aware that your neighbor used a HEI product or a home equity line of credit, but you are aware they access credit in their home and or equity in their home to make a major improvement or put in that swimming pool or send the kids to college or whatever they may need to do.
Yeah. And, we work with a number of homeowners who are self employed, who may or may not be able to access the equity that they would like to with a traditional product. Frankly, we understand that, right? We are much less dependent on, predictable recurring income than a credit product would be. So I'm not suggesting that's necessarily a bad thing. It's just a different homeowner with a different set of needs. So yes, I think more products is good.
Yeah. When you think about kind of alternative models in housing, the iBuyers and that kind of ecosystem has gotten a lot of attention in the last few years. And one of the areas of attention has been the negative impact of cost of capital over the last several years. So can you give us a glimpse into the types of investors that are interested in HEI and kind of how that interest may like ebb and flow in different market cycles or if there's a different force there that I'm not aware of?
Yeah, no, it's a really good question because, we think at Hometap, we really, we have three stakeholder groups primarily. We have many, but we have three primary ones. Obviously, the homeowner, um, and obviously capital. Like we need capital partners to understand this, to find the value proposition and see how it can complement some of their other investments in the residential real estate space. And then we have employees, and we have an employee group team who is very homeowner first, who understands, however, that whatever we do, it needs to work for homeowners, it needs to work for capital, and it needs to work for Hometap. There also has to be a business model if we want to keep doing this in the future. And so it is intellectually a very, very interesting time and place to be. So on the capital side, I think most likely our investor profile follows a lot of the more innovative, the more new it is, the more uncertainty there is for investors, and therefore the risk return suggests there's higher risk, so they need a higher return. We do see that kind of curve. We anticipate that curve coming down over time. And there have been, there is an emergent secondary market for home equity investments, which will continue to increase the, investor base, which again should bring more capital in. And I think that over time we will see an evolution of the cost of capital come down over time as we're able to prove, get track record, and so forth.
Interesting. So bringing this back to you, Sarah, this is not the first business that you've been part of where there was some category creation going on. I was going back through your history and drawing an analogy to Zipcar. Certainly not the first rental car company, but a very different approach of creating a category and serving consumers with a product that looks and feels similar but is very different. Tell us about what attracted you to Hometap and about your background and history that made you uniquely qualified to help grow this business.
Sure. Yeah, I really do. It's true. Zipcar was a really interesting and fun business. And he was, again, identified a dislocation in the market where, hey, we've got all these people living in cities. They would love to have a car, but that's really complicated and expensive. And on the other hand, the other alternative is to rent a car, and that's inconvenient. And so, and takes a lot of advanced planning. I mean, I would argue like there was a financial benefit to using Zipcar, but the biggest benefit was the ability to be spontaneous, have car-like control without car ownership.
I was an avid user back in the early 2010s. That was a tool I used all the time. But I was living in New York, traveling to Boston a lot. It's so easy to grab a zip car. It made life very, very easy.
Yeah. And so again, it's a bit of a dislocation, and then taking advantage of a lot of very new technology at the time to make that a practical business model. And so I think that is where time and again, we've seen how technology can in fact power a business and new technologies can power a business that wouldn't have previously been viable. And so, yeah, that was a wonderful business. We had a really strong member base like you. They're really wonderful to work with. We engaged with our member base regularly to help actually make decisions about the go forward um, uh, view of the business and go forward strategy of the business.
All right, so it wasn't just Zipcar. You've also been involved in Virgin Money and other businesses. Give us were there any like key learnings in your career that made Hometap really attractive, or that made you uniquely prepared for this challenge?
I do think, as we were touching on with Zipcar, I think when you have a new category, basically, or a new product, it does take a certain amount. Well, it takes a certain amount of bravery. I don't know, fearlessness, because there is no track record, there are no benchmarks, there is no roadmap, and so I personally find that very exciting. And I think that you can obviously create a lot of value, but if you're willing to just approach things with a natural curiosity, I think that it's a great puzzle to figure out. And we talk at HomeTap about, we're just here to solve puzzles, right? That's what we do. Every day is a new puzzle, and we work to try to figure it out and stay true to the long-term goal of the business.
One of the other challenges of defining a category is how you're perceived by the incumbents in the industry. So here at HousingWire and our Housing News audience, we have a lot of traditional mortgage executives and real estate brokerage and sales leaders. Have there been any kind of misperceptions about the HEI model or HomeTap with the real estate or mortgage community, or any area where you think the housing industry should better understand about HEI and the model that HomeTap is pulling forward?
I don't know if there have been that, to my knowledge, significant misunderstandings. I think that, perhaps it's a question of how does this particular product fit into the overall, constellation of options that are available to homeowners. I think that by and large, we do appeal to, there's certainly overlap in the target customer base, but I actually think it's not a zero sum game. It is definitely a net growth in the overall market if you were to, include all of the home financing options.
Okay, I understand. So you mentioned growth. Let's talk about Inc. 5000. HomeTap ranked number 66 nationally, one of the fastest growing real estate businesses in the country. Give us a view into what market dynamics or the timing of your evolution that is driving this momentum right now.
Yeah, well, a few things. First of all, that was like awesome to hear. We were very happy about it, but we certainly approach growth really diligently, very thoughtfully. Again, the market is very large. There's room for a lot of players, just like in the mortgage space. So I don't think it's like, growth for growth's sake at all. I think it is strategic growth to drive a long-term sustainable business. We This is a very significant decision for homeowners. It is a meaningful decision. It's a long-term decision. It is often, not always, they're the biggest component of their net worth. And so for us, it's about getting it right. So we need to make sure that we're executing on all cylinders. We need to make sure that we have aligned our capital and our homeowners, and that one isn't really outstripping the other, so that we never want to have to say no to somebody who we've already had a conversation with. So I would say, I think diligent growth. I don't want to say slow and steady because it hasn't been slow, but at least steady.
Okay, steady is not bad.
Yeah.
Slow can be. I don't know though. In 2023, any growth in housing is a has been a win for most market participants.
Yeah,
Um,
I mean, agreed. It hasn't been like, I think 2023 and sort of the flux that, hit the capital markets quite suddenly, has caused everybody to just like take a breath and make sure that nobody's getting ahead of themselves.
Yeah, and that's one like thing we've heard from a few folks in the more like capital intensive side of housing innovation, as there's been some strategic pullback in like how much capital is going into market right now as we kind of figure out the current cost of capital. Even if demand outstrips supply for money, that's a decision that we're seeing some people make.
Totally. Yeah.
Yeah. So, Sarah, can you give us? I know Inc. got a look behind the scenes here, but can you give us a glimpse into any financial or operating metrics of kind of where HomeTap is today in terms of size?
Well, let's see. We have worked with 8,000 or so homeowners, and yeah, over our last few years, and so we're pretty excited about that, and we see no reason why we can't continue on that kind of growth trajectory.
Well, 8,000. So I didn't get at this point in the evolution, do you start to get a feel for the amount of time the average, not going to say borrower, but
Yeah, thank you.
invested homeowner stays with Hometap before they repay or sell?
We the answer is like not definitively because we don't have 10 years of history, but we have, as you might imagine, done quite a lot of modeling, and so far our actual, experience is pretty on target with what we had anticipated. Um, and there's a tail. I mean, some settle early and some hold long. So, we can hit the average, which I don't know is probably going to be 4 to 5 years, perhaps on average, and we will have certainly a tail on either side of that.
4 to 5 years actually makes a lot of sense because if we see the average homeowner staying in a house for 10 to 12 years, they're not taking a home. I'm assuming it's unlikely they're taking a home equity investment in year one.
Nope.
Like they're waiting for to build some equity in the home, or like until that next need comes for capital. And so they're probably kind of at the halfway point in their home ownership life cycle in that property when they're tapping Hometap. I keep using tapping. It's not intentional.
It's
It's
quite all right. Yeah, that's about right. Again, you have all kinds of distributions, but yes, that would be an average uh, amount of time in which a homeowner has been in their home before they would contact us.
So, Sarah, as we were prepping for this conversation, you had mentioned that HEI is at somewhat of an inflection point. Can you go a little deeper there and tell us about like kind of the inflection point that you see the space at right now?
Yes, I think that a lot of the trends that we talked about earlier around you know, the fact that homeowners are reluctant to, let me put this way, are a little bit reluctant to commit sort of forward-looking earnings towards an obligation, a cash flow obligation. I don't think that's changing anytime soon. As much as, frankly, I might like it to for the greater good, I think that and the rate of change and dislocation in different industries, I don't think is slowing down. And I think that that makes people more insecure about wanting to commit to additional debt. So I think that isn't going anywhere. And I think that home values, even in this time, in higher rate environment, home values have not come down. And we do have this sort of supply and demand challenge in, housing stock. And so I think that the things that create the market for home equity investments, I see as still being there and not really going anywhere. So I think a product like a home equity investment is just a really good fit for many homeowners.
Is there a social proof burden? Like, is there once you start to see a few home equity investments in a community, does that kind of start to like flywheel more activity? I feel like would be tough to be like the first person in your family or social circle to take a home equity investment, but once you understand how the product works or have seen peers or people you follow in one regard or another experience the product, there could be momentum.
Yeah, I think I appreciate you raising the point. I think it's a really valid one. I It's also why we have said from the beginning, let them. We're happy to have competition because it is a form of proof in and of itself. I think if you're a homeowner um, trying to make an informed decision, the fact that there are other people and you can look at how they work, and it's just more information. But then similarly, we anybody who works with us and uh, gets towards the end of their process with us, we ask them to rate us on Trustpilot. It is a third party. We don't get to choose who gets the invitation, and we don't get to edit what they say. But that too has been a really great um, body of social proof. And we have, I don't know, almost 3,000 homeowners who have taken the time to say something about their experience with us. Which, to your point, when it is new and unknown, it's it's a big decision. It's new and it's unknown, and you really want to make sure that you're doing the work to make a good decision.
Thinking about some of the other players in the space, I mean, we've seen home equity investment players that are focused on the purchase of a home, others that are focused on extracting equity in existing home. Can you give us a little lay of the land of how other models work and like where you see the most competition or at least the most like awareness in the market by model?
Yeah, we obviously are most focused on the home equity investment space. And we were the first to come to market with what we would call a share of home value model. So it's very, very simple. Um, and that was really the goal. We wanted to make sure that people understood and could figure out what Hometap share would be worth at the end. And so the way that our model works is we have an agreed upon share. So when you would take an investment, we would say, here is the share of the home at the time of settlement that Hometap is entitled to. There are other models that work on a share of appreciation. And so they typically will calculate that based on a discounted home value at the point of entry. And then depending on the appreciation from that value until you sell or settle, they will get a piece of that appreciation plus the original investment. So different models. We opted for the straightforward approach.
Pretty straightforward, but like still a complicated landscape for the average homeowner to understand. I tried to go through your consumer direct channel, like through the website. Are there any B2B partnerships, or is there a role that like the real estate industry plays in education or awareness? Give us a glimpse there.
Yeah, not at the moment, but I certainly think and hope that that does come to fruition. I mean, there are professionals who have spent their entire career, working with homeowners and know how to educate them. And so we definitely anticipate as the market grows that that will be a really important channel.
It seems like housing professionals are really like, I know this has been going on for decades, but really latching on to the idea of being an advisor for life. And the metrics tell a different story. I think it's mid-teens, the number of homeowners that actually go back to their first real estate agent or first loan originator. But nonetheless, there's a narrative of how important it is to build that customer for life relationship. And there's more technology and tools that are coming out right now to help agents stay involved in the housing life, the financial life of the folks they helped buy or sell a house. So I can see home equity investment being part of that journey. That like I would uniquely look to my real estate agent to give me this advice. Like this would be a good fit for you.
Right. And or just to validate, like, hey, I'm looking
Yeah.
at this. What do you think? Yeah.
All right. So Sarah, as we look forward, you can answer this question either way you want. As we look forward to the future of Hometap or the future of home equity investment, what's in store? What would surprise the housing industry about what's to come in this HEI space or with Hometap specifically?
Well, I mean, I don't think we have any tricks up our sleeve. I think we're pretty committed to what we're doing and to doing it well. We do. To your last point, we do have a track record, and both we have a track record. It's important, and we enjoy working with the homeowners we do work with, and we have developed pretty tight relationships with them. I think we have a very strong focus on treating homeowners with respect. We have crafted our homeowner experience so that our homeowners have a single point of contact. So the first person you talk to at Hometap is the only person you talk to at Hometap. And and our belief is that, the challenge for our technology is to make that a viable business model. And so there are certainly homeowners who, frankly, I might be one of them, who I like to do a lot on my own online, and so we have made that channel certainly available. But then you have a dedicated, we call them investment manager, who, if you do have a question or a concern or what have you, they are your person and they will manage your investment from start to finish. So we're really focused on this space and creating a homeowner experience that hopefully will potentially open up options for us in the future.
The ability to speak to one advisor throughout the whole transaction is a very differentiated consumer experience compared to other consumer direct models, and especially in mortgage. That's been one of the major challenges of really building strong relationships between a consumer direct lender and a home buyer, and maybe equally important or more important, the lender and the real estate agent who ultimately advises the home buyer. So that's a differentiating factor.
Yeah, for sure. And it's worked well for us. Obviously, I should say, obviously, in particular, when you have a new category and a new product, and it's very important for us to make sure the homeowner, fully understands it and knows that they can ask any question anytime. I think that's really critical to success.
I you might like love or hate this comparison, but there's parts of HEI that feel similar to the reverse mortgage product of accessing home equity. I know that's a mortgage product and a debt product, not an equity product, but the education curve is pretty high for a borrower who is going to tap equity through a reverse mortgage product. And I know that some of the reverse mortgage lenders have put an emphasis on single point of contact through the training and origination process. More complex than a traditional 30-year qualified mortgage.
Yeah, I think in terms of wanting to make sure a homeowner, everybody should abide by this, but making sure a homeowner knows, has a full understanding of whatever product they're buying is really important. I think, as distinct from from a reverse mortgage, and frankly, something that makes HEIs a little simpler is that exactly what share of the home tap, is entitled to at the end. So there isn't that level of complexity just doesn't exist. And that our ultimate payment is a function of the home's value. So you can really, really never, we won't write to the point where you can be underwater really with a home tap investment.
Well, Sarah, thank you so much for sharing more of your journey and the experience you have at Hometap and the HEI product. Home equity is going to be a big topic on stage at our HousingWire annual conference coming up in October. And you gave me a lot of things to think about as our content team preps speakers and topics for the HousingWire annual conference. I hope you can join us. We'd love to have you there. But this is an incredibly well-timed topic at this stage of the housing cycle and in the housing industry in 2023.
Thank you so much for having me. This was so much fun.